Wealth Creation is brought to you by Investors Group and Shafik Hirani. Welcome to Wealth Creation. Joining us, as always, is Shafik Hirani, Division Director at Investors Group Financial Services, Inc. He's the #1 financial advisor in Canada at Investors Group, according to New Business Credits. Shafik, as always, thanks again for coming on the show.
Thanks again for having me, Chad.
So every week, we're here to put Shafik on the spot when it comes to investment advice. Now, a fair amount of your practice is made up of small business owners.
Yes.
So when it comes to investing, what's a strategy for small business investing?
Okay, well, the first thing you have to look at is what attracts small business owners, what they're looking for. And most business owners are looking for a number of things. One, tax. I mean, one of the biggest mistakes people make is tax. You know, they try to say, well, I'll save money if I can pay off my mortgage. I'll save money if I can reduce my grocery bill or my utility bill. Well, 40% of what we make goes to taxes. So the first thing you got to look at taxes. Alternatively, what they look for is how to credit approve my business, how to get money out of my small business on a tax efficient basis. Do I dividend sprinkle? Do I pay out corporate earnings?
So how do small businesses effectively increase their cash flow? So sometimes, a small business, they'll make some money and then they spend it. It goes to certain things like taxes and just certain other overhead costs. But how can a small business effectively invest?
Okay, well, the first thing we have to do, again, is go back to our taxes. So if we look at how we're taxed as individuals, if I'm an employee, I'm taxed at a certain rate. So here in Alberta, I'm taxed at, let's say, 40%. So if I make 100 grand, I pay 40 grand taxes, I'm left with $60,000. The taxation for small businesses is a little bit different in Alberta, and I'll just show you a quick calculation. If you had $100,000 in your earnings or revenue, what's called active business revenue from your business, you're going to pay still the 38% tax bracket, but the small business, the federal government gives you what's called a 10% abatement, so the provinces can levy their own taxes. That brings your federal tax rate down to 28%. Now, if you're earning what's called active business income, you get what's called a small business deduction, and that deduction is 16%. So you get a 16% deduction on a certain amount of income. That brings your tax rate down to 12%. Then the provinces levy their own taxes. Now in Alberta, again, the provincial tax rate is 3% plus surtaxes, which adds up to about 4%. That gives you 16% tax on active business income. So if I make 100 grand as an employee, I pay $40,000 in taxes. I make 100 grand as a small business owner, I pay $16,000 in taxes. That extra money can be invested. The problem is you must invest it in the right structure of investments. So there's a structure of investments called a corporate class structured investments. These investments grow tax sheltered, and that's how you grow tax deferred investments, and you invest them through your corporation.
Well, Shafik, always interesting.
Thanks, Jeff.
And as Shafik mentioned also, that was an Alberta case study, so this will vary across different provinces and territories.
You bet.
All right, so for more information on Shafik Hirani and the Wealth Creation segment, log on to energytv.com.